One of the most common reasons why traders don't make the kind of money they should be making in the market is because they believe that market should be functioning on their timing. While exactly the opposite is true. You should be adjusting your schedule to the market's beat, not the other way around. So oftentimes I talk to a new trader or somebody that maybe only traded for a few months or a few years, and they're telling me, well, Leo, look, I'm gonna take a day off on Thursday and then I'm gonna be trading. Which I respond, well, hey, today is Monday, okay? And we're getting some major catalysts in the second half of the day. So the time to trade is now. And the response would be, but Leo, but I can't be trading today because I'm at my work, because I'm picking up my kids from school, because I'm doing this, because I'm doing that, because I'm doing that. The market does not give a shit what you do, okay? So you should be identifying those instances and time frames on where it could be highly profitable to be trading the market. And in this video, I'm going to do something that we normally don't spend a lot of time doing, and that is outlining exactly what economic data that is coming out this week you should be paying close attention to. And there's a ton of economic data that's coming out all the time, but there's certain type of data that can impact the markets to much greater extent than some of the other ones. An easy example would be like the Federal Reserve meeting that's coming up on like the 30th and the 31st. The rate decision on the 31st at 2 p.m. That's clearly a market moving event. But there's a lot of economic data that comes out every day worldwide that you should be paying attention as a trader. And hopefully I'll break it down to you in a way where you will understand finally, why is it so important to have a futures account, not for the sake of trading futures, but for the sake of actually capturing those big moves in the market that happen on many instances before regular sessions of the market open, before the regular trading hours open. So market will move. Why do you think there are days where you wake up and the market is already down so much, or the market is already gapping up so much? Well, because look at this data. So for example, January 21st, which is tonight, we're going to start getting some news from China as far as their loan prime rates. Now, this is not going to be a market moving event. Germany, 5:30 in the morning, already stuff. Like, here's a biggie, okay? ECB President Lagarde speech, okay? So this could impact the market. Now, this is not going to be a grand market moving event, but this would be an equivalent of Powell speaking in the States, opposed to Lagarde speaking in Europe. So this would be something to pay attention to. That's going to be at 9 a.m. And so if the market's going to react somewhat, the initial reaction, hey, you can catch a nice trade right here. Okay. Germany auction, not a big market moving event. So there's stuff that's happening in Australia business confidence. It's going to be at 7:30 Monday, January 22nd. So most of the people will never even think about trading at 7:30 at night. Most of the regular traders don't even think, and I'm referring to the traders that trade options, right? Because generally people don't understand that you can actually trade options after hours. If you're listening, you're probably shocked right now. Leo, how can you trade options after hours? I've said it in many, many videos, guys. You can trade options on futures. And this is why you should be calling 13 market moves, because we have perfected the system of trading options on futures. So when in Australia you're going to get this business confidence number, okay, the futures will be moving and you can put some nice trades. When at 10 p.m. on Monday night, okay, instead of watching movies on Netflix or whatever, guys, I mean, you should be trading this Japan interest rate decision. Just to give you a quick example, okay, so Japan is going to announce whether they're going to keep rates the same, raise them, lower them. Clearly, there should be no surprises. But if there is a surprise, you will see dollar moving. And what do you know? If you've paid close attention to a lot of the correlation videos that we've posted on this channel, is when DXY is moving, what else is going to be moving in response to a move in DXY? It's going to be the price of gold. Oftentimes, it's going to be a movement in the price of oil. So by understanding how to interpret this at 10 p.m. on a Monday, you could put together a very nice trade on gold. But most of you don't do it, and most of you miss out on some big market moving events because they happen at some odd parts of the day where an average trader doesn't even think about trading the market. So in this video, we're going to glance at some of the economic data catalysts that are going to come within certain time frames, right? You know exactly when the announcement is going to hit the market. So you prepare and you schedule your schedule around these events. If you want to be a successful trader, the last thing you want to do is come in on a day where nothing is happening and you're like, hey, whoa, I'm ready to trade today, let's go, and it ain't nothing fucking happening. So what good is that going to do for you? Nothing. So focus on the catalysts. Focus on the catalysts that could be moving the market. And a lot of times, look, just being there and being ready and being able to place a trade, being able to read the initial reaction, the easiest strategy, we advocate here at 13 Market Moves. You want to trade in the opposite direction of the initial reaction, which is very, very counterintuitive. Simply, as I explained in the last few videos, most of the traders, they're the slaves of the price action. They see something go up, what do they want to do? They want to buy calls at exactly the fucking point when the market is turning around and it's dropping, okay? The reason why they want to buy calls because they look at these fucking green candles and they want to get in on the call side. Well, because they can't see the next move. And oftentimes when these announcements are going to be hitting the market, okay, you'll see a reaction. Let's say you can see some begin to drop, but that reaction is going to be very short-lived. And before you know, like within 30 seconds, a minute, things could be going exactly the opposite direction. So your goal is to be there. So a lot of these announcements, you're going to have a market reacting in something going lower for just a brief moment, and then it's going to do this. Or you're going to have the opposite situation where something can go briefly higher, and within a couple of minutes, it could be doing this. So when I'm saying trade in the opposite of the market initial reaction is if you see a knee-jerk reaction to the downside, it is very counterintuitive to buy calls in that moment, because when you're going to be looking at your screen, you're like, oh, fuck, it's dropping, man, let me get in, let me buy puts. And you're buying puts exactly at the moment when things are about to reverse and go higher. And the same thing is true. People just can't, I don't know, it is psychologically, to 99% of the people, it is very difficult psychologically to buy puts when clearly they're looking at the screen and everything is just, oh, Leo, it's going higher. I'm getting in right here. I'm buying. Boom. Totally fucked. Okay, so trading in the opposite of the initial reaction, guys, on some of these events is going to prove to be a highly lucrative strategy. But the point is, right, you got to be ready. You got to be either on your phone. Most of the apps, it's faster now to place a trade on the phone than it is on the desktop. So I have some traders this week that came on board, like they don't even know how to place a trade on the phone. Guys, you got to start there. I mean, you cannot be a dinosaur and beat these fast-moving market. You have to be ready. You have to be ready to put these orders in lightning fast. So guys, Monday night, hey, there it is. There's two trading opportunities within 2.5 hours away from each other. Okay, you could be spending Monday night trading with 13 Market Moves. And so some of these macro announcements, again, the markets are so interconnected and correlated that by understanding how some part of the market reacts, how an interest rate decision in Japan is going to impact a reaction in the US dollar, and how a reaction in the US dollar is going to impact the price of gold and the price of oil. Okay, you can trade this, but guys, you have to get your account set up the right way. So most of you, again, you need to first get approved on your account for trading futures, and clearly you got to have the approval in your account to be able to trade options. So if you have, for example, if you're trading options on stocks and you don't have futures right now, but you have the options approval, all you need to do is get approved for futures, and you will automatically be able to trade options on futures. And that's what you really need to trade these decisions outside of market hours. So let's move on, and let's go through some of these market moving conditions. Market moving catalysts that you should be paying attention to this week. Okay, so nothing grand is happening as far as economic data on Tuesday, but there's a few things to pay attention to. So 8:30 a.m. and guys, this time is in Eastern, it's New York time. Okay, so Eastern Standard Time. Canada, new housing price index, new housing price. That's just something to tune in and listen to. Not a big market moving event, but something to pay attention to. I will be paying close attention to Richmond Manufacturing Index at 10 a.m. This could move S&P. This could move a lot of industrial stocks, because every regional manufacturing index that has been reported has been off huge. And we've talked about it in some of the late videos, such as the Empire State, the Chicago PMI, the PMI overall in the States has dropped off from 55 to 47 handle in the last reading. So this could confirm the trend of lightning fast deterioration in manufacturing production. The numbers have been way off. And so, I mean, they're already expecting bad numbers, right? Previous was minus 11. They're expecting minus 15. But hey, they expected minus 11 on Empire State and came in at minus 44. Holy shit. So could we get another ugly number as far as manufacturing? Okay, so that would, just observing this, what does it tell you? Well, I mean, if we continue getting these poor manufacturing numbers, okay, you short the industrial stocks. You don't go long on them stocks. And so this could be a great moment, right? You see, for example, how can you utilize this? Okay, so on Tuesday, right, hey, we already know that there is a great probability of the following moves happen in the market, such as 2, 3, 11. So let's say you're monitoring an industrial stock like Caterpillar, okay, and these numbers are coming out. And so the market so far has been kind of ignoring all these regional manufacturing numbers that just been way off to the negative side. And so, for example, you see Caterpillar by 10 o'clock. Let's say Caterpillar on Tuesday opens in the green and it keeps going higher. And then at 10 a.m., we get this really bad Richmond Fed Manufacturing Index. That's your entry. Yeah, I mean, you have to think twice about it. That the only thing you don't know, okay, well, how strongly will the stock of Caterpillar respond to this? But chances are, if you're catching it and you're trying to move to on Caterpillar, 10 a.m. would coincide with a great catalyst and a pivotal time frame, real close to a pivotal time as far as trading a move too. So you could be catching a really easy trade. Again, one thing you don't know is the magnitude of the move. So Caterpillar after 10 a.m. it could drop off if the numbers continue to be bad. It could drop off a couple of points, just a little bit. Or it could do something wild, right? Over the next hour after that announcement. I mean, you could see, so let's say it could drop $2, it could drop $7. Okay, so that is the thing you don't know. So if you wanted to trade it safely, you just buy a put option at the money. Then that's it. So if you want to be highly speculative, take a more risk on, you would buy a put option that's more out of the money. And so and then it would be the magnitude of the move that would determine, okay, how highly profitable your trade would be, or it depends on the size of the move at that point. But that is why you would want to focus on, let's say, 10 a.m. Okay, you already know what it is. You already know the expectations, and then you pay close attention, but be ready to take action. Okay, so looking further into the day, you got balance of trade in Japan. Okay, and again, a lot of really good trades when we're trading options and futures, guys. Okay, they're gonna be after hours, pre-market. I mean, like this Richmond manufacturing index, it's 10 a.m. so anyone can trade it. But like some of your cool trades are gonna be like after hours, pre-market. Okay, so you want to have your account set up. You want to be able to trade futures at 7 p.m. Shortly after Japan is gonna announce their balance of trade numbers. Let's look on January 24th, what we've got. So see, this is where it really comes. So you'll see a lot of big drops at times around 3 a.m. You'll see some big drops at 3:30, 4 a.m. It's because a lot of data is coming out from overseas. So if you're in the United States, I mean, you probably don't really, I mean, some of these, they're important to pay attention to, because if it's an overwhelming surprise, right, the market will react. First, the market will react in Europe, but you've got, for example, France, services PMI, manufacturing PMI in France, composite PMI. So France is reporting basically 315 right here. And I mean, these numbers in France, they could be ugly as hell. So the expectations are 44.8, forecast expectations are at 45.4. I mean, the number could come in at freaking 40, okay? And there you go, you open your screen, and so European markets are gonna be down as a result, or some kind of negative reaction. And look, some of these things, that's a domino effect, right? So France is reporting at 3:15 in the morning, then you got Germany reporting, same stuff, right? Manufacturing PMI, composite PMI, services PMI. So first France, then Germany. So if you get a bad number in France, and the market may not be reacting yet in like any kind of big way, and then you got a really shitty number from Germany, which is definitely has got like a 90% chance of happening. Germany's fucked. So is France. I'm not sure who's fucked more, Germany or France, but they're both fucked. So basically, I mean, you could get two bad numbers. I should really put this more like in a different color here. So, I mean, if Germany also comes to a really poor number, I mean, you got back-to-back, first France, then Germany, right? Then Germany could be at 34. Shit, that'd be ugly as hell. So basically, a lot of... Great Britain, London's going to be reporting basically their PMI, and so all these numbers, I mean, it's good to pay attention to this, because that's going to determine European markets. London, are they going to open up, down? What are the reactions are going to be there? And, all of that is going to basically determine that day the reaction in the movement of a dollar. And in the next video, guys, I'll make a separate video about the dollar chart. And basically, if you are able to figure out the overall direction of USD, it puts a lot of your other trades like in easy mode, okay? So if you can figure out the inflation, the movement in USD, you're gonna be able to nail gold trade. You're gonna be able to, in many instances, oil is also correlated to the way dollar moves. And sometimes oil recently has not been very correlated to that, but correlations, they come in the markets and they're very strong at times, and then they fade and they disappear for some time, and then they come back. So if you catch the moment when you can spot that correlation, you put together some really crazy trades. So all of this, guys, is happening early in the morning. So, and depending on how good or bad these numbers look, okay, we're going to get a reaction in the markets overseas. We're going to get a reaction in the dollar, in the USD. And you, by understanding where the overall move in that's going to be, you can put together some easy trades. So this is the time. You wake up, you trade the market for a few hours, but also, even if you don't trade and just pay close attention to these numbers, you're going to be able to understand how the market is likely to move in the United States. So all of this stuff, guys, it's very, very important. CBI business optimism is so it's just basically on Wednesday, 24th, okay? I mean, guys, I'm going to be watching all of this. I'm also going to be paying attention. There's going to be a lot of companies announcing earnings reports. So by the time the market is open, I'm going to be on top of all of these things, okay? And so for some of you that, you know, absolutely can't follow this, that would be a reason to sign up with 13 Market Moves, because we're already going to do the homework. We're going to be putting some crazy trades on this. If some numbers are completely out of line, things are going to be moving in a crazy way. We're going to be capturing those moves. While most of you guys are still going to be asleep, and you're going to wake up, and then on CNBC you're going to be hearing, oh man, this manufacturing PMI in Germany was total shit, and you're going to be listening to that at like 9-10 in the morning. Well, the train has left the station at 3:30, but you're just going to hear about it at like 9-10 o'clock on CNBC. So this is a good example of how a trader can really miss some great trading opportunities, but not by not having the account set up properly. Okay, so this is continuation. Now we're at like 9-10 o'clock. Rate decision in Canada on Wednesday, January 24th. So this is definitely a tradable event right here. Monetary policy report in Canada. But look, before we even get into that, 7 o'clock, January 24th, Wednesday, we're getting mortgage applications. So a lot of mortgage related stuff. S&P Global Composite PMI, PMI Flash, all not huge stuff, but something, again, this will prepare you to trade the market. I mean, you get this, you look at some home builder stocks, how they're responding to that. And all of that stuff, guys, you got to do pre-market. So by the time the market opens, you're ready to roll. You already got your plan of action. You already know what's going on. So not a whole lot of other stuff going on Wednesday after 10 o'clock. So, this is definitely tradable right here. So all the oil stuff. So between 10:30, a lot of oil related stuff, a lot of oil reports are going to come out. So you trade oil at 10:30. You trade oil futures. So you'd be planning your day ahead. Hey, 10:30 Wednesday, guys, I'm trading oil. That's it. I mean, there's going to be a reaction. I'm going to trade that reaction, and this is going to be a time frame that's going to be most beneficial to me to invest in trading oil. Okay, guys, and this is where things become a little bit more interesting. Okay, Thursday, if you were to pick one time frame that where the market can move substantially, it would be Thursday morning, because we got a ton of stuff that is actually indeed market moving. Everyone's going to be paying attention to this GDP number at 8:30. And again, when is this going to happen? It's going to happen an hour before market opens. So if you're unable to trade futures, guys, you're going to miss the big move. The market will be moving 8:30. Okay, 8:30 a.m. on Thursday. There's also durable goods orders number right here. We got manufacturing in Canada. ECB interest rate decision. Okay, that's a big one. Okay, and that starts at 8:15. So if you were to pick like one day that could be highly, highly effective for you, let's say you're very busy working, but you cancel everything for Thursday morning and you trade futures with options with 13 Market Moves Coach. That's it. And this is how you can make money for the whole week right here, guys. Trade Thursday morning, January 25th. The market will be moving. And most of you'll be coming in at 9:30, and because because between 8 o'clock and 9 o'clock, 9:30, there's so much stuff that's going to be happening that by the time the market opens, it's either going to open a lot higher or it's going to open a lot lower. And you're going to be missing all this action. So when you're going to be coming in, you're going to be making a lot of bad decisions at 9:30 because you're like, oh shit, well, I missed the move. Or you're going to be watching the market drop like crazy. You're going to be like, okay, well, let me get a piece of these action. And you're going to be short in the market, let's say after it's already down 40 points. And maybe it's only going to have 20 more points to move. So basically, you're going to miss the whole move. Okay, so the point here is, in many instances, an average trader misses some of the biggest opportunities in the market because they are associated with a catalyst that happens outside of the regular trading hours. And when the market opens at 9:30, okay, you're only reacting, or you're only trading an hour after things have already taken place. At 9:30, you're not able to trade the immediate reaction to the ECB interest rate at 8:15. You're not able to trade an immediate reaction to the GDP in the United States at 8:30. So you're missing a lot of catalysts that are happening pretty much within that hour from 8 to 9 on Thursday morning. So set up the futures. Call us if you don't know. We'll recommend a good broker. There's only a few that are really good, guys. And again, just by no means, don't ever trade with Webull, TradeStation. Guys, you trade with those two, you're automatically fucked. Okay, you will be missing colossal trades. If you touched one good trade, they're not going to deposit money right away from the proceeds of that trade for you to go ahead and take another trade. And so I can't believe Webull and TradeStation, so many people are signed up with them. I know why so many people signed up with them, because there's so many people on YouTube promoting these bullshit platforms, okay? And nobody's promoting the good ones, because the good ones, they don't have the referrals set up. So there's no reason to promote the platforms we are actually using that are good for execution, for trading futures, for doing all that. So if you want to set up with a good broker, you call us here at 13 Market Moves and we will help you. But I just told you, you trade with Webull or TradeStation, you're at such disadvantage right off the bat. Before you even place the trade, you're already at a huge disadvantage, because you will end up missing great trades if you're with those two brokers. So just don't use them. So, and don't miss Friday, guys. Friday's going to be huge. PCE number, personal consumption, 8:30. Look, again, do you see the consistent in that all key economic data gets reported before market opens? So if you're not trading them at the exact time frame, if you're not trading the initial reactions, you are missing those 4, 5x, 10x trades at times, depending. The numbers need to be way off for the market to make a big move. But in either way, you're going to get a reaction. So you come in and you trade those reactions, which by the time the market's going to open at 9:30, those reactions are already played out. So you're missing some of these great catalysts that are revolving around the economic data, simply because, yes, some economic data gets reported during regular market hours, but key market moving economic data is normally going to be reported pre-market or post-market. That's it. In 90% indices, it's going to be pre-market. So if you like to sleep late, guys, then that's why you're not catching these big trades. Start waking up earlier. Or just trade with 13 Market Moves. We'll wake you up. We will wake you the hell up, telling you, hey, bro, you gotta wake up today. This is the big day. This is the money-making day. Set up your fucking alarm. We'll call you, okay? We'll make sure you're up. So many reasons, guys, for you to sign up with 13 Market Moves, because, dude, you try to do all of this on your own. If you're running a couple of businesses, an Amazon store, some other stuff you're involved in, guys, it's a lot. So just go to 13mmtv.com, schedule a call, talk to a coach. We will keep you alerted at those critical time frames where you got to be glued to your screen, where you got to be instantly executing, okay? Because sometimes these moves, when this economic data comes out, it's going to be so lightning fast that, again, I recorded the video on the Netflix trade, a difference between Some traders taking it right at 9:30 and some traders taking it at 9:34. It's a difference between a 7x trade and a difference between a 1.5x trade. So which trade do you want? You want the 7x? Then get your ass up early, sign up with 13 market moves, and don't miss these critical moments, critical time frames, okay? Critical reactions of the market to the economic data that's coming out. So set up your account to take advantage of that. And you don't have to trade futures. You trade options on futures. That's it. And for those of you that made it this far in this boring ass video, I'll give you the biggest secret, which is there's no PDT on trading options on futures. So you can have an account under 25K. Most of the brokers are going to require you to have 2K to trade options on futures. And you can place 5 trades, 10 trades, 30 trades. If market conditions call for you to place multiple trades that day, such as trading around these key economic announcements, guys, you don't have to worry about your PDT. So if you're trading with a cash account right now, instantly, you got to fix that. With a cash account, let's say you catch a really good trade, okay? Well, you can't use the funds to the next day. And if the market is moving, you should be trading. When the market is not moving, you shouldn't be trading. With a cash account, you cannot capture any of these trades because you can only trade with a cash account when market opens. So get rid of the cash account. These are practical recommendations, guys. This is like steps towards your success in 2024. You get rid of your cash account. You get a margin account because in order to trade futures, you're required to have a margin account. It's not like a broker is going to borrow your money to trade options on futures. No, that's not going to happen. So you're not risking, if you're trading with a 5K account, the only thing you're risking is 5K. Unlike most of the people, they misunderstand the margin account. People think, well, margin account, I know when I trade stocks, I can buy stocks on margin. When you trade in stocks, it's totally different ball game. Many brokers will lend you up to 3-4 times the money you have in your account. So if you're trading with 30K, okay, they'll let you buy stocks for 120,000. If you get that shit wrong, then that's when they call you, it's called the margin call, right? They want you, if the value of your position drops, you gotta put more money. With options, you don't have that. People call options risky. Well, they're fucking wrong. Options are a lot less risky than trading stocks because the only thing you can lose is what you put in the trade. When you're trading stocks on margin, you can lose a lot more than what you put in the trade. So trade options, okay? Some of these trades will go exponentially higher. Trading weekly options, 0 DTE, I mean, you don't have to put hundreds of thousands of dollars in them to make a few $100,000 on some of these trades, on some of these days when you should be paying attention, you should be trading. So I started this video by saying that some guys, they're saying, well, I'll be ready to trade next week. Well, who gives a fuck, okay? The core PCE is going to be announced Friday, okay? And the market's going to have a huge reaction to that number. The market doesn't care if you're ready to trade next week. The market is saying that it makes sense to trade this Friday, okay? So by understanding that, you should be adjusting your schedule towards these time frames when the market is highly tradable. And in order to capture these trades, you should be prepared. You should have your account ready. You should be able to trade futures, options on futures. You should, call your broker. If you're with Webull or the TradeStation, you should get your funds out of there now. You should call us. We'll set you up with a good broker, guys, who's not going to give you shit. For those of you who trade with Robinhood, you guys are out of your fucking mind. Okay, straight up, you're out of your fucking mind. You cannot trade 0 DTE with Robinhood. Okay, so if a perfect opportunity comes in, like how many times has this happened? I don't know. A trader trades with me on a Friday, and I'm seeing a huge move in a particular stock, and I tell them to buy same-day options expiration, and the trade goes 30x. But with Robinhood, they're unable to buy same day expiration. So they have to buy the following week expiration. So basically they're paying 5 times more for the same option that we're paying for with Friday expiration. So when your cost is 5 times higher, you're not gonna get a 30x trade. Again, all of these trades, the structure of the trade, you buy options when they're mispriced, okay, in the calculation of a bigger move happening that the market does not see yet, okay? And your lowest cost on option is going to be the day when you are like, why do I need to buy options if I'm trading this event, the PCE, the inflation barometer, basically at 8:30? Why do I need to be buying options that expire next week and increase my cost of options? Because I'm only going to be in this trade for maybe, you know, a few hours or the whole day. If I'm catching the top in something and I think it's going to be a move 2 or a move 3, you know, I may jump out on the drops, get back in on the bounces and trade that pattern throughout the day. Or I may just, depending on, I may just put on the position. I may close it by lunchtime or, you know, 3 o'clock. So there's no need for me to be going and buying necessarily. If I'm trading the reaction at 8:30, I don't necessarily need to go buy options for the next week and increase my cost and therefore hurt my profits. But so if you're with Robinhood, you're fucked. Okay, you're gonna pay 5x more just to trade this event because they're not gonna allow you to buy options that expire Friday. So guys, there's some things, there's small things, but you should be aware of them. And some of these things, you may be a good trader, but if you don't know these small things, this is why you're not locking in 5x trade. This is why sometimes when I talk about these 30x, 50x, 100x trades, you can't even picture it because you're buying options that are expiring a month from now. Good luck getting a 100x trade on that. So as a trader, trade the catalyst, trade the event. Prepare yourself ahead of time. Just by watching this video, yeah, it's a lengthy one, but hopefully it was helpful. So if you're still awake, fucking congratulations. You've learned some good tips in this video. And if you want to learn more, guys, the easiest way to learn is to trade with a 13 Market Moves coach. So go to 13mmtv.com. Take all our fucking courses, guys. You know, all of this money you invest in, it's going to be made back at the speed of light. You know, on one trade sometimes. So a couple of trades, you've paid but for all your investment in the courses, but guess what? You have the wealth of knowledge now that nobody can take away from you. And every little bit of information that can help you get an edge, that can help you, let's say if you're busy with businesses or if you're busy with your job, and your excuse is, well, Leo, but I can't trade this because of my job. Well, fuck, clear your job schedule for Thursday morning and Friday morning and trade that. You know, get somebody else to fill for you. But how would you even go about that? Well, you got to plan for it. So you come to 13 Market Moves on a Sunday. I just underlined for you 2 best time frames to trade when it comes to economic data. And so you should be able to plan your schedule now for the week much better than you would have done otherwise. But so there's a lot more little tips and secrets, guys, that your coach will share with you as you're trading. And guys, you just got to get started. You could be listening to a ton of YouTube videos out there, different channels. You can get a lot of general information. When you come to 13 Market Moves, we're going to get very specific. Okay, this is the ticker we're going to fucking trade. Okay, this is the strike. We're going to buy puts or calls. This is your expiration. Do it now. That's it. We're going to get very, very specific. So if you're tired of this general bullshit, then you come to 13 Market Moves and be ready to execute like a machine. The market is about to make some wild moves. Don't miss the big moves. Remember, the market does not work on your timing. You have to work on market's timing. So I invite you to trade with 13 Market Moves so you can catch the beat of the market and profit from that next week. Let's roll. I'll see you guys in the next video soon. 13mmtv.com. Click the orange button. Let's go.
First, distract target. Then block his blind jab. Counter with cross to left cheek. Discombobulate. Dazed, will attempt wild haymaker. Employ elbow block. And body shot. Block feral left. Weaken right jaw. Now fracture. Break cracked ribs. Traumatize solar plexus. Dislocate jaw entirely.